Hello, today is September 4th, 2020, and we need to do a follow-up video on yesterday's Apple video. We obviously had a large sell-off today in equities, and that really spooked a lot of people, the high volatility, and that really started on Thursday and led over in today. And we had mentioned in our video yesterday that we thought 120 would kind of hold in Apple and that we would stick our neck out and kind of make that call. And you can view that on the Apple video. This is part two. So part one obviously was yesterday, and today obviously is after the close on Friday night. And you can see here's what the Apple stock did. It had a very sharp drawdown to open the day. You could see that it was a really quite a down move in the open, just in the equity market in general. We were down a little bit over 100 handles in the S&P, and you can see that we were down about 10% at the lows in Apple, down to around 110. And the 110 level, I think, is just kind of interesting from a kind of a technical analysis standpoint, that you can kind of just draw this trend line up right here and see, like, there's kind of some support in here. Maybe you could kind of make that case, right? And so that's one heck of a sharp move. And so when you zoom back in again, we had the 10% drawdown. The stock really recovered. The whole market sort of seemed to bounce back up towards the end of the day. The VIX and volatility kind of collapsed, and then we were only down 5, and then we actually closed down just a little bit, right? We closed at right around 120, and that 120 area is significant because that was the key area mentioned yesterday. These two yellow lines are from yesterday. We mentioned 120 as being kind of a big support level, and then 125 based on Wednesday's data was where all the gamma sat, right? The 125 expiration Friday. So those contracts are now done, and our data from this morning in the Equity Hub. Again, if you go to SpotGamma.com, click on subscribe now or hover over subscribe, and you'll see the SpotGamma Equity Hub, and that's the tool that we're looking at here. And so, there was a lot of gamma expiring today, and again, that was concentrated once again at 125 strike. What did change, though, is the delta strike and the top put OI. They're the same. The key delta strike, I think, dropped down, and that was kind of a interesting thing that shows you that most of the in-the-money calls now are down at 100. And there was, just on Thursday, there was huge volume. And then today was, no different. Today's call, today was, again, skewed heavily to the call side. And this was the profile, again, pre-open. So you would have looked at this, 6 in the morning, 7 in the morning Eastern time, a couple hours before the markets open. You can view this chart. So we had this big drawdown to the 110 area, which is kind of a, you can kind of see this starts to tail off, but there's probably a little confirmation bias in my saying that. But again, these two lines, the call and put gamma, I sort of read this as there's a tug of war really between the two levels. On one hand, you're supposed to sort of combine these two lines, the call and put gamma lines, to aggregate them and say that's the total notional gamma. But as we've explained in other videos, seems like there's a flow difference when you get into whether the stock is embedded in call or put gamma or both. And so we got the bounce today. We get a little volatility recovery, and this 125 line, which you can see here, is where all that OI was expiring yesterday. So, assuming those were long calls, there you could make the case that there's some pressure on the stock, because if these are long calls, dealers are short those calls, and they're unwinding some of those hedges. But the fact of the matter is that they probably unwound a lot of that stuff on Thursday, or certainly kind of into this flush again, to start the day. And so I sort of view that, there was some overnight selling. You have people panicking when they get home at night, and they put their money in their, they roll their 401k money or whatever it is out of stocks, and so you get this sort of sell off to start the day. And then we bounce. There's dip buyers, there's people selling puts, there's probably some bullish call flow in there, and you just kind of get a little recovery. The shock sort of subsided, and you just didn't get the feeling today that after the initial shock down that there was really much panic, right? I think a lot of people kind of understand that there was a force in markets that made things go just crazy to the upside, and that was bound to unwind, and that's different from something that's fundamentally changed and we need to sell. Now, I don't know how this will work out on Tuesday after the long weekend. Tesla got rejected from the S&P 500, which um, I only bring up because Tesla's been such a leader in this sort of speculative call space and speculation in general. So, when the speculation poster boy gets tagged, it's generally not a great thing. But at any rate, all of this OI will change for Monday morning. But just to give a quick update, we said we'd stick our neck out, and some people asked for an update, and this is what it is. So initially, our call wasn't looking too good, but we did get some recovery into the afternoon. And again, on sort of my view of the stock is much like it was yesterday. That there was very strong call flow again in Apple today, and so you didn't get sort of the sense that there was real panic and fear and dumping this name and dumping stocks in general. But there's a long weekend. A lot of news could come out. Sentiments can change, and so we will have to see what the new data says that comes out around midnight tonight.